All right, so we've seen quite a bit of a drop in the index in the last few weeks, and we've gained some degree of synchronization with some global markets also on a retreat. And the PSEI has fallen quite a degree already, given the support failures that we've seen coming around. But I think the index is coming towards an area that has been heavily oversold, and we are anticipating that a major rebound should be able to be around the corner, and hopefully that this is something that traders can take advantage of. Well, the most recent cause has been, of course, the global pandemic we've seen since the introduction of the coronavirus. And this is throwing things a lot of whack because the ill effects of this particular virus has yet to be seen. And it is affecting a lot of sectors like travel, tourism, transportation, cargo. We have yet to see what the impact on retail businesses and consumer businesses will be. And it is hitting a wider section of society. And this is the reason why the markets have been more formidable in the declines that they've shown. I guess the word to play around with is the word called uncertainty. When you have these periods of uncertainty coming by, the tendency for investors to stay into the sidelines, or if they want to protect whatever capital that they have, they would probably pull out first and ask questions later. And until they get a semblance of stability come back inside, I don't think they're going to be putting a heavy amount of money off the bat. They'll probably be more gradual, or they will wait for prices to become maybe even cheaper for them to be able to put a stake on risk, because that's the only thing that can probably tell them, maybe at this price, no matter what's going on out there, I feel quite confident that I can make good money here later on. Okay, so rebounds from these particular conditions normally take time to develop. Normally, after a very exaggerated decline, the rebounds can be sharp depending on how far prices have been pushed away from certain resistance points, which we'll talk about in a while. And I think in this case, since the index has been grossly oversold, yes, this could be an opportunity to make some money into the short term. However, just to qualify that the first rebound of a decline normally shows a first rebound, and then there's an opportunity for prices to come back a second time to retest support. If it can hold from that particular threshold, then the rally that will come after might even be wider. So we'll have to take this rally one step at a time. The first one will be a very quick recovery, and off that recovery you might be able to make some money, but please take note that there might be one more situation the market may have to deal with in terms of continuing its decline. After that, there should be another potential for the market to rally once again. All right, so let's begin by looking at a big picture of the index. I have here a picture of the weekly of the Philippine Stock Exchange Composite Index. And if you see here, we've broken through a shoulder head shoulder pattern recently after we've broken below 7,500. And in a couple of weeks after that, we've seen the index fall down to where we are today, which is closer to about 6,867. Now, I think we've just approached a first major support area for the index. If it really slides even more from here, maybe we could probably see something closer to 6,500, but I'd hope that this area where we are could hold. Furthermore, we're already seeing some weekly oversold readings as well, and normally when you get a weekly oversold condition, usually that's already a good sign that the market is hitting perhaps the tail end of the initial selling that we're looking at. And if you look at from the index here, we've seen a very, very sharp decline into this, falling down to about 6,800 or 6,750. And your index has already hit levels that we saw last October or November of 2019. And this area should be the first level of major support that we should be concerned about. Also, looking at the RSI on the daily configuration, here it is also showing very oversold readings as well. And one more indicator I'd like to also introduce, which is what I call the price percentage oscillator, which is what you see here in the bottom. What this particular indicator does is it shows a percentage threshold that the index normally goes up and down by. And this shows you the difference between the price as compared to its 20-day moving average. If the distance between the two extends and normally goes to a range of about 4 to 6%, normally the market runs dry into the selling and a major rally usually surfaces right after that. We are already at the 6% zone. So that already tells me that these are already historical levels that the market has shown that they usually create temporary bottoms and that normally a very good rally can stem from it. Now, another indicator also watch out for is looking at quite a number of the index stocks we have. And after lining up all the index stocks that I looked up, almost half of the index line of issues are already at oversold levels. And perhaps about 6 or 7 of these particular picks that we have are already grossly oversold as well. So this is already telling you that the market is already coming overheatedly into a decline, and these are perfect situations to be able to expect that counter rally should normally frame up for. Now, if you were to look into a weekly version of this, or the weekly chart versions, you would see that about 1/3 of the index lineups are also oversold in that perspective, and that also contributes to the fact that the markets have been grossly oversold already at this particular point. We call rebounds from an oversold market a mean reversion trade because this moves a market very much on the oversold side, and it pushes it so much below a 20-day moving average. Here in my chart, you'll see it like this blue line that you see here. And if you were to look at the index here on the right, you'd also see it at about this area here. Now, this is where prices are, closer to 6,750, and this is where your 20-day moving average is, which is closer to about 7,250. So if you were to look at those spreads alone, you'd get about a 500-point difference in terms of potential rally space for the market given these conditions. Well, an oversold rally is simply a situation where people have probably sold their stock positions, not because they are looking at valuation, but it's only because they're selling things because they are scared. And normally these are situations, or what they call capitulation sellings, where you will get opportunities to be able to buy companies at very discounted prices. And if they marry themselves by being oversold at the same time, just try to imagine yourself like the market is stuck within a rubber band, and the more you pull that together, the more tension it is to be able to try to pull itself back. Now the rubber band is extremely stretched right now, and so the ability to make a rebound is quite strong. I guess the only thing that we're waiting for is for things on the coronavirus to die down a little, and if an opportunity like that can happen, then we'll probably have a trigger. Or perhaps if the US market can make a particular rally, then maybe the Philippines can follow suit instead.